These files were never meant to be public, but someone reopened them. This is the Dark Bureau. Money in West Africa doesn't just disappear into vaults or encrypted ledgers. It moves openly, slipping through hands in market stalls, across roads rarely patrolled, passed along networks grounded in trust, reputation, and need. Here, the informal movement of billions is not a loophole, but a structure forged by necessity and circumstance. Official economies glow in daylight, visible through ledgers and receipts, but beneath every small trade or family transfer, an invisible system quietly sustains millions. A shadow network, both lifeline and vulnerability. To most, these transactions are routine, as familiar as a neighbour's face. To governments, they represent a baffling gap, a vast parallel world beyond audit, regulation or control. Tonight, we illuminate the foundation of West Africa's unregulated banking, tracing how necessity, adaptability and risk shape its evolution and its cost. Observe the daily rhythm. Under single lights, cash is counted and relayed. Goods shift borders marked only on paper, and travellers phone relatives for quick, unofficial transfers. These moments look ordinary, yet their scale outstrips much of the official banking sector. Where trust in banks falters, the informal networks thrive, offering flexibility and access denied by bureaucracy or cost. For street vendors, a borrowed sum or sent payment is survival itself. For corporations, informal routes mean speed, privacy, and sometimes secrecy. For criminal groups, these channels offer the perfect cover, where transactions leave no digital trace, and accountability is a distant notion. Shadow banking in West Africa isn't just improvised, it's robust, adaptive, and designed for opacity. These underground financial webs run on relationships, kinship, clan, community, and shared risk. In the heart of Lagos, a handler collects calls, records figures in a battered book, and dispatches messengers on mere trust. Transactions are sealed by verbal code, reputation, and sometimes the threat of communal fallout. The network adapts whenever needed. Routes change, intermediaries vanish, codes shift. The same flexibility that helps families pay school fees also shields arms deals or narco profits. In the shadows of regulation, the system offers safety nets or camouflage, scaling from food markets to illicit trade, from the mundane needs of a family to the ambitions of a syndicate. Invisible until exposed, it's almost indestructible, sustained by demand and design alike. For investigators, the signs are indirect. Luxury cars fill streets while customs revenue dwindles. Cash changes hands outside banking records. Property prices soar despite economic downturns. Tax officers chase gaps in spreadsheets, missing paperwork, unexplained capital outflows, mismatched trade ledgers. Surveillance teams monitor border crossings before dawn, tracking traders whose declared income can't explain their worth. Networks are mapped and remapped, but for every thread unravelled, new ones appear. Central banks try advanced oversight, programming algorithms to detect suspicious flows. Raids seize evidence, phones, cash, coded notebooks, yet the system reshapes itself overnight. The more officials innovate, the more nimble underground actors become. Real-time tactics rarely outpace a network whose roots run deeper than any single institution. Why does shadow banking flourish here? Because borders, drawn long ago, mean little to people linked by old markets, kinship, and coexistence. From coastal cities to landlocked markets, commerce moves by memory and adaptation. Where formal banking fails, blocked by corruption, inefficiency, or simple absence, informal solutions fill the void. For migrants, remittance corridors run through living rooms, not banks. For traders, cash moves in unregistered convoys, sidestepping fees and delays. Shadow banking is not just a criminal enterprise, but a tool for survival, offering credit, insurance, or opportunity when banks won't. Yet risk follows reward. Criminal actors exploit these flows, concealing arms, drugs, or untaxed goods amid legitimate transactions. Task forces face dead ends. Paper trails end in uncooperative witnesses and missing data. Lines of responsibility stretched across borders and dialects. With every investigation, new blind spots emerge, shrouding money and motive alike. At street level, the shadow bank is low-tech and unremarkable. Bare desks, calculators sticky with use, ledgers tacked behind counters. But a simple call or coded text can ripple transactions across borders in minutes. Intelligence services intercept cryptic phrases, water for money, shoes for inventory, nonsensical times for amounts. Forensic teams sometimes manage coordinated raids, freezing small mountains of cash and arresting a handful of handlers. But the storefronts soon reappear elsewhere, even more hidden. The chase benefits the chaser and the chased, each escalation driving networks to new adaptability, frustrating enforcement and regulation alike. Structurally, shadow banks thrive in the space between weak or misaligned laws. Local police often lack mandate. Customs officials face intimidation or temptation. International cooperation is fragmented, with criminal flows jumping from one soft spot to another. Cutting-edge anti-money laundering filters struggle under the weight of sheer volume and smart evasion. Sometimes the actors behind these networks are untouchable, protected by local power, political connections, or sheer indispensability. Even when breakthroughs come, institutions whisper of the risks, investigate too zealously, and the fallout exposes allies or triggers economic backlash. Shadow banking is neither strictly criminal nor fully legitimate. It is deeply woven into society's fabric, surfacing wherever official finance is too costly, complicated, or simply absent. Policymakers are left with a near impossible dilemma: clamp down and risk paralysing the economy, or look away and concede ground to shadow actors. Recent years have propelled shadow networks to new sophistication with mobile money, encrypted apps, and even cryptocurrencies. Where once a ledger and handshake were enough, now exchanges happen in blockchain addresses and secret threads, layering old trust with new invisibility. Regulation and tracking lag behind. Digital transfers zip across borders faster than authorities can flag them. Actors diversify risk, moving sums through mazes of accounts, uncoupling names from numbers. The explosion of digital cash has created a deluge of data. Yet for both crime fighters and criminals, more information means more ways to hide. Enforcement loses ground. Illicit actors shield themselves in both tradition and technology. Communities that run these networks are a study in contrast. Some handlers are trusted elders, others are linked to armed clans. Many move nothing more than savings and school fees. Others hide the proceeds of smuggling or worse. Scholars debate: is shadow banking born of crisis or of cynical profit? Investigations always uncover a contradiction: too much repression, and the network fragments into darker, harder to track forms. Too little, and it embeds as a daily habit, with criminality normalised. Policy swings between outright bans and gradual formalisation, but each move risks creating new problems: entrenched hierarchies, criminal expertise, and eroding trust in official finance. The most revealing probe came after a border raid in 2023. Agents seized ledgers and digital storage, mapping transfers for commerce, aid, and organised crime. Flows so interwoven that regulators struggled to separate good from bad. The same shadow system sustained ordinary families and illegal syndicates. For governments, the results were sobering. Enforcement that's too aggressive risks genuine humanitarian damage. Yet unpoliced, the networks offer limitless opportunity for criminal finance. The dilemma: can any actor truly distinguish clean from dirty within this system? Or has it slipped beyond clear boundaries, forming a semi-autonomous economic realm insulated from government control. As governments, banks and development programs respond, urgency rises. Central banks double down on surveillance, deploying analysts and artificial intelligence to detect suspicious flows. Regional summits pledge cross-border cooperation, while NGOs press for solutions that preserve livelihoods. Yet technical fixes often ignore social realities, where crackdowns shut down remittance shops, entire villages lose their economic safety net. Ordinary families and local traders, those most reliant on shadow banking, are hit hardest. Attempts at reform can trigger anxiety and marginalisation, driving users into even riskier terrain and trapping the most vulnerable between failing state systems and fading informal ones. Shadow banks survive not by avoiding notice, but by remaining essential, bridging gaps the formal sector hasn't filled. Each government crackdown or regulatory campaign brings risks. Will strict enforcement safeguard stability or worsen exclusion? Policymakers and analysts acknowledge that social contracts are at stake, not just legal codes. Balance is urgent. Regulation must target real threats without severing the lifelines for those left out by state banking. Until borders, laws and the realities of daily survival are reconciled, shadow banks will endure, flexible, vital and profoundly impactful, quietly shaping the region's future as indelibly as its past.